Up you guys, welcome back to another video. Today we are going to take a look at Gbpjpy from a fundamental, technical, order flow as well as a sentiment perspective, and look for the best probability in the market there as well. And if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. Now if you enjoy the video, please smash the like button for the YouTube algorithm, and as always, let me know down in the comments below exactly what it is that you would like me to cover in my next video. Now starting on the monthly time frame, first we can see how Gbpjpy had been stuck in a consolidation phase after it printed this massive impulse and that correction, and we can see how the market is currently printing the next impulse. The market finally broke out of this consolidation phase, so we can definitely expect a pullback before the continuation to the upside there as well. And if you look left, you can see how the market is also currently testing a previous strong level of resistance in the market, giving us a further indication that we can expect a pullback before the continuation. Now from a weekly perspective, what do we see? Now on the weekly time frame, we can firstly see how the market printed this massive impulse. After an impulse, you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the low to the high. And we can see how the 0.382 is lining up perfectly with that structure, giving us a further confirmation that we can expect the market to pull back to this previous level of resistance that is now acting as support before the continuation to the upside there as well. Now if you drop down on the daily time frame, what do we see? Now here from a daily perspective, the price action is kind of the same. So we have this massive structure that the market had broken over here, and this is obviously where we're expecting the market to pull back before the continuation. Now firstly, we can obviously see how the market had started this red candle, which is called the deceleration process. And once you see bear stepping into the market, that gives you confirmation that there is sell orders pending, or there were sell orders pending at that price. So we can definitely expect Gbpjpy to continue slightly bearish in the short term and then continue to the upside there as well. Now the best way to approach the situation is obviously to wait for the market to show some signs of further deceleration, because you can see how the market is currently indecisive. So the best way to approach that is to wait for the market to obviously shift the bullish momentum to a bearish momentum, and then you can also use price action in confluence with market structure to look for best opportunity in there as well. Now if we go and overlook at the sentiment data, so this is what retail traders are doing in the market. Now we can see that it's very clear how 84% of them are short and now 16% of them are long. Now that is why you see the kind of price action that you get over here. So if you drop down on a lower time frame, you might see a consolidation with some spikes to the up and downside, because the market obviously need to grab that liquidity before it moves to the downside, and that is a good indication of why we could see this market fall. But there is some indecisiveness taking place in between, but that is purely because the market needs buyers, enough buyers first, in order to sell the market to the downside. So what they do is they consolidate the market, grab liquidity up there, grab liquidity down there, grab liquidity, and then next thing you know, the market starts plummeting to the downside as well, in order to complete this impulse correction and impulse pattern as identified from a weekly perspective. Now if you go and look at the data that we got for the GBP, so we know that currently that there's an earthquake that had taken place in Japan, and if you don't know, an earthquake has got a negative impact on our country's economy as well. Why? Because public places like hospitals, schools, companies, they get impacted negatively, meaning that impacts the overall GDP of the economy negatively, meaning that the currency, the Japanese yen, gets impacted negatively as well. Because like the saying goes, a country's economy is dependent, or a country's currency is dependent on how strong a country's currency is doing. So we know that it has been very negative for the Japanese yen on that side as well. However, on the GBP side, we can see how the BOE, Bank of England, they came out, they hiked another quarter basis point last week as well, which is good because investors like to invest into currencies that has higher interest rate as well. The CPI came out today, going from 5.5 to 6.2. Now CPI is the consumer spending index, which measures the amount of money that consumers spends over time. But what this leads to at the end of the day is inflation. But what makes it even better is that the Bank of England did the opposite of what they did in the US. So the US waited for a high inflation, then they started hiking interest rates. However, the Bank of England first hiked interest rates, and because they obviously knew that they were getting going to get these higher inflation rates. So they actually worked the opposite way. US had some high inflation. Powell recently said that, and which is kind of weird. He said that inflation is quite high and we need to do something about it. I mean, come on, Jesus, you know, the inflation has been high for as long as we can remember. Don't come out here and tell us something that we don't know. But that is also a good key indication, because it means that you know, that they are quite aware of you know, they might be able to lead to a high inflation, so they hike interest rates in order to find the balance between the two. Now the next thing we are going to look at is the order flow data, so the commitment of traders, and this tells us what the biggest banks, hedge funds and institutions are doing in the market. Now based on the last report that we received, we can see how hedge funds, they came in and they closed 18,540 long positions or buy positions, and they also closed minus 2,005 selling positions. Now we can see how the overall net positions went from 5,000 and now sitting at minus 16,000, giving us an indication we can expect the GBP to decrease in value in the short term there as well. As for the JPY, you can see how hedge funds started 2 weeks in a row, started adding buying positions to the market. We can see based off last week's report, they added another 952 buy positions, and the overall net positions is still sitting in a positive, giving us an indication that we can definitely expect the Japanese yen to increase in value in the short term. Now, the best way, like I said, to approach the situation is that you can definitely start looking for selling opportunities for the market to come down, you know, complete that impulse correction and impulse pattern. But you obviously need to make sure that you apply the rules of the strategy that you trade in order to find the best entry in the market. Now that's all from my side. If you enjoyed the video, please smash the like button for the YouTube algorithm. And if you know of anyone else that would like educational content, please share the video around as well. Now that's all from my side. And as always, cheers for ears.